Hello everyone, just making a video to share my thoughts and strategy regarding the markets, given what's happening in the world at the moment, and especially this crazy reversal that we had across many asset classes yesterday. So let's just start from that point. Yesterday was an extremely unusual day, where we had actually started out very positively, from a portfolio point of view, because we were short the S&P, so that position was up very nicely. We also were very long gold, and as you can see, it spiked up massively. We were long oil, which had also gone up significantly. And I think those were the main positions really that witnessed these very big reversals, which unfortunately took us from nearly achieving a back to break even February to swinging 5 or 6% in the opposite direction. It's really an extremely volatile day. So it's hard to say exactly why this happened, and it is definitely reminiscent of this day that we saw here just a few weeks ago, that, as you can see, did lead to quite a rally upwards, but then to further downside and new lows. So this is by no means a conclusive end to this downtrend, and I think it's important to notice and to remember a few things here. That the trend here is really still down. We need more than this for the market to prove itself. When you look at the Nasdaq, you can see that the 50-day is just beginning to cross the 200 on the downside, and both these major indices are kind of forming quite a clear, maybe it's more visible on the on the S&P, quite a visible head and shoulders, which is a kind of notable topping pattern. So I guess the main question on everybody's mind from a market point of view really is, could there be more downside, or have we seen the bottom? And there's there's quite a few elements to this. So one thing that we can start by looking at is sentiment. So even though sentiment is definitely not great, given what's happening with Russia and Ukraine, I don't think it's at its worst if you compare it back to March of 2020. You really need a sentiment low, like extreme low, in order for a bottom to be put in when the market is going through such negativity. And one data point that might reinforce this would be the FANG stocks. So if we take a look here just at the number of buy recommendations that we see for the major FANG stocks, it's still the vast majority, right? So there's still this perceived sense of safety there, which in the past has been an illusion. The places that are perceived to be as the safest often end up crashing the hardest. And if we look at the individual stocks like Apple, we're still very close to the all-time high. Same with Amazon. It really hasn't broken down from this sideways range that it's had for quite a long time. So this kind of makes me lean towards the fact that we might not have seen a bottom. I mean, sentiment doesn't need to be completely destroyed, and these are very strong companies, so they might not go any lower than this. But there is so much going on with the war, inflation, rate hikes coming, that it's a very hostile environment, and I would expect sentiment to be pretty shattered before we actually turn around. So that's one data point. Another point of view might be that it's hard to have a worse day than we did yesterday with basically a declaration of war and an invasion, something that we haven't seen really on this level for a very long time. And so it could be the kind of in this case, sell the rumor and buy the news. But again, it's very, very hard to know. The thing that markets hate the most is really uncertainty. So, as unpleasant as it is to talk about these things or to think about, it might be that the market actually, in a sense, gets some relief from knowing that the invasion has happened. Even though it's a negative event, it removes some level of uncertainty. Although that's not something that I'm totally convinced of, because if we actually think about what's happening with Russia and Ukraine, a lot of smart people that I was listening to were basically very convinced that this invasion on this scale was never going to happen because Putin didn't have much to gain from it, and all sorts of other logical reasons. But I do wonder whether Putin is still basing his decisions on some real logic, because if you look at the effects that this has already had on the Russian stock market, on the Russian ruble, it's been devastating. So it's very hard to understand where he's trying to go with this, and it seems like he doesn't really care about the consequences that much. And what I'm trying to say here is that I don't think we should rule anything out. There's a lot of unknowns here, and in my opinion, the asymmetry of this market is still very much to the downside, with the US talking about potential cyber attacks against Russia, which could definitely come back the other way. And this is something that the world has never really experienced, right? So we really don't know if Russia has bigger plans beyond Ukraine. Given Putin's attitude, it wouldn't be unreasonable to think that. So, yeah, what I'm trying to say here is that it's hard to say that, hey, that was it, that was the worst, the invasion of Ukraine. There might be a lot more to come. It doesn't seem like Russia is really slowing down with these sanctions. So, are we going to have a bigger war? What is going to happen? So I wouldn't rule anything out, and that's why I'm definitely trying to tread with caution. From a technical perspective, I'm also short the German index, and I think this is kind of one of the clearer or cleaner breakdowns of an index. You can see it had a fairly clean horizontal support line, which are much easier to contend with than other formations like Head and Shoulders that might have a diagonal neckline. This kind of formation, when you just break through it on the downside like this, it tends to do what it looks like it's going to do. And you can see that there's been some huge volatility, right? So big gaps down and up, and even some very big green days. But you can see we're not back close to the breakdown level, and the trend is still very much down. So this could be a clue, and I'm going to maintain this short for the time being. European and American markets don't necessarily have to act in tandem, but it's one piece of the puzzle. But in general, this really shows. Actually, we can have a look at can go and have a look at the S&P or the Nasdaq back in the COVID period. See, even though the trend remained down, we had some crazy snapback rallies, some crazy green days during this move down. And the other thing that I would point out is that trying to catch the bottom is usually quite a dangerous game, right? It would be much better to go long, let's say around here, once the market has already bottomed. So yeah, you're going to miss the absolute bottom, but the market kind of has some time to go sideways, catch up with the moving averages, make some new, put in some new lows, some higher lows, and then some higher highs. And so you can wait for this kind of confirmation and still capture a lot of the upside. So I'm in no rush really to try and catch the absolute bottom in stocks. And if you look at individual names, they're very much all over the place as well, with some crazy gaps up, gaps down, and just not very not acting in a very clean or orderly manner, right? And usually when you reach a bottom, there's a period of consolidation, of reduction of volatility, and then a change of direction. So that's kind of what I'm going to be looking out for the time being. Let me just pull up my portfolio here. For the time being, you can see that we're just basically short the ruble, and we have gold across two different positions with different leverage, a very small amount of crypto, short the German index, long a little bit of natural gas, but we are very much in cash. And I think that just continues to make sense because, as I've said again and again, you don't know how far this could go. I'm of the opinion that there isn't going to be that much more downside, like this kind of level that I've highlighted here, or on the Nasdaq. I think that's where we might end up. So another 10 or 15% decline from here, it would be a sort of 38% fib retracement of this whole move. That's just my opinion, but all I'm saying is that we shouldn't exclude the fact that this could be a major top, right? And we've seen many bear markets in the past, and the markets can go down way more than this. So it just doesn't seem like a smart time to be very heavily invested. So even though we've been hit relatively hard in our portfolio as well, I'm going to try and play things cautiously, stop the bleeding, and continue to just take it day by day. I'm still rather perplexed by some of these crazy reversals, but as long as the breakout level holds, I think it still makes sense to be long gold. I think my stop loss is somewhere around here. So again, if these positions move against us, they will hit their stop loss. I'll reevaluate. There's no need to be fully invested in these kinds of conditions, in these kind of markets. I think your priority has to be to try and minimize the downside. And we've already seen a decent drawdown in the markets and in our portfolio, which isn't the end of the world. I know it hurts when you're in it, but it's worth remembering that you see something like this, at least a 10% decline on average every year, 20% every few years or so. I'm not sure about the exact number, but when you look back, they always end up looking like a blip in the chart. So try not to panic, and I think we just need to continue to be patient and rational. So some of the other issues that are at play that I mentioned briefly earlier on is the Federal Reserve and the potential of hiking rates. That was really the main concern that the markets had before all of the Ukraine drama happened. And some have attributed the reversal to the fact that it seemed less likely that the Fed would hike rates, or at least hike them aggressively, given what is happening in Ukraine. But the Fed has actually suggested or said quite explicitly that that is not the case, or that at least they, for the time being, continue to plan to raise rates according to the trajectory that they had outlined. So that statement doesn't seem to have affected the markets that much. So maybe we can conclude that the rally wasn't due to that. But again, a lot of unknowns, and this whole situation really kind of compounds itself with different elements, because if this continues, it's likely that there'll be some shocks in the oil price, and that in turn is going to make inflation worse. And that could, if inflation continues to get worse, that is going to force the Fed's hand to an extent to raise rates faster or harder. So there's really so much at play here. Finally, if you do want to try and see the silver lining in this market correction, remember that market corrections are definitely opportunities to find the next leaders. So when the market is seeing such difficult conditions, the leaders or the next leaders really have a chance to shine. So there will be some stocks that during this market decline will be very resilient, or will even be going totally in the opposite direction. And that makes them a little easier to find, because when the markets are just going up and everything is going up, it's much harder to differentiate between a special like new leader type of stock and just the average stock. Whereas when the majority of stocks are going down, the leaders really stick out like sore thumbs. At the moment, I must say that even though I'm continuing to keep an eye on that and to search for the next leaders, there really doesn't seem to be much. And that kind of also leads me to believe that maybe we are still in the initial or medium phases of this downturn. But again, we just have to wait and see. So overall, I continue to be, I would say, mostly bearish, but please focus on the long term. Remember that these things happen, but ultimately the markets will recover. So please don't panic. Remember to focus on the longer term. And again, I'm sorry for the drawdown. I continue to try my best to mitigate it, or even make a profit if we can. Clearly, it's difficult in these kinds of volatile conditions, but I will continue to try my best. Again, don't panic. Try and step away from the markets. Don't focus on the day-to-day fluctuations, and remember that over time things will recover. Right? If you have any questions, please don't hesitate to drop them in the comments below. If there's a lot, I can definitely do a live stream and try and tackle some Q&A. And yeah, thank you for listening. I hope this was insightful or useful to you in some way.